TradingNut, episode 51.
Master the science, master the rules of trading. And there are plenty of rules that have passed the test of time before you begin to trade by more of an intuitive style.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the TradingNut podcast. I'm your host, Cam Hawkins, and today we've got Dr. Thomas Carr on the show. Now, we've got a fantastic interview with Dr. Thomas, and I tell you what, he goes into so much detail about his whole career. We talk about cryptocurrency, we talk about trading stocks, we even talk about investments and how to sort of pick those investments and manage them. Real detailed interview, and then we jump on, and we don't jump on. He's given me a video to put up on the channel. That's something he recorded just for the TradingNut audience, so you can see that on the YouTube channel after the show. Head over there. I'll put a link in the description as well. Now, before we get into that interview, there was something that in the last week happened to me, which was slightly different from what I normally do. I'm involved in another podcast, and I mentioned that at the end of the last show. So I'm going to tell you a little bit more about that now. Now, look, it's not a promo for the podcast. It's a completely different audience. I'm in it with a few other guys. And in fact, I wasn't even interviewing in this one. I will be doing it in future ones, and I'll let you know what it is once it goes live in maybe 2 or 3 weeks' time. Now, the thing with this is we got to interview somebody who was at the very top of their game back in the day. So they played in the English Premier League. That's the soccer league, if you're unfamiliar with it. Played in one of the top teams there for many, many years. Got to interview the guy. There's a photo of him up on the Telegram group. So if you're not in the Telegram group, jump over there onto tradingnut.com. There's a link to that. You can get in there, have a look at me taking a photo of the guy whilst we're doing the interview. Now, he was in the room, which makes a big difference when you're, I suppose, sucking up information. I mean, we hear this information today. On the podcast, you're going to hear today from Dr. Thomas Carr. He's going to give us a whole bunch of knowledge. Just, you'll be able to suck it all up. The problem is, because it's digital, it's so much harder to do, and it's in a roundabout way. For whatever reason, there's just that we're missing that energy. And I think being in the room with somebody of that caliber in the last week was fascinating, because he wasn't just talking about his career and the highlights and lowlights and all that sort of stuff, but it was what you got out of it was the mindset that he had as not just a person but a player, and how that mindset could be transferred to pretty much anything in life, and in particular into what you're doing with your trading. His view was like he wanted to be the best, and he would do whatever he could do to become the best, and that would mean he'd be playing alongside other superstars, finding out what they're doing. Like, trying to learn from them, asking them questions, asking them why. Then, like, when he found even more superstars, guys that are even higher up in the game than him, he'd be like looking at what they're doing and modeling what they're doing, asking questions, being really inquisitive. And then when those setbacks came, he wouldn't stop and go, "Oh, I've got an injury, the career's over, job done." It was like, how do I get over this? How do I move forward? It was always about moving forward, never looking at it from a pessimistic view. It was always optimism the whole way through. So these sort of things, I think, should resonate with you as a trader, even if it's not. I suppose it's something we've heard on the show before, where if you treat trading as a professional sport, as do a lot of the professional traders out there who are making money, then things actually might start becoming you might start becoming more successful, or at least finding success quicker. That means practicing. That means taking it seriously. That means, being diligent about who you learn from, trying to find those mentors who are going to teach you what to learn next, as we're going to get here today from Dr. Thomas Carr. So not just sort of listening to this once. I mean, somebody, actually an ex-guest on the show posted in the group the fact that he'd listened to that Larry Williams interview that I mentioned in the last week's show. He'd listened to it 3 times. So that's the commitment, that's the dedication that you need to do if you want to be at the top of this game as a trader. Just to put things into perspective, especially if you're a newbie who's just starting to listen to the show and it's the first show you're listening to. Anyway, enough from me. Before I let you go, I do want to let you know I've got another robot going up into the Robot Traders Club today. It's a nice little strategy. Actually, it won't be today. It'll be today, but when you're listening to this, if it's on the day that it goes live, it's probably been in there for a week. It's a nice little strategy submitted by one of the members. Now, the way it works is if you're a member, submit a strategy. If it looks good, I'll build it into a trading robot, put it up there for all the members to use and try out, test in the markets. And there's so many settings that you can configure it to however you want it to trade. It's only $7 to get in the door. Give it a go if you want to have a bit of fun, if you want to check things out, see what it's all about, see if there are, if there's something in there that can either help with your trading or can automate some of the stuff that you already do. All right, guys, I think without further ado, let's get on with this interview with Dr. Thomas Carr. All right, folks, we've got Dr. Thomas Carr here on the show from drstocks.com, and that's DRSTOXX, not stocks, the word that you often trade. So how's it going there, Thomas?
I'm doing fine, Cam. I'm happy to be on your show today and appreciate the invite.
And where are you calling in from again today? I can't remember.
Yeah, we live just outside of Washington, D.C., capital city, and in Northern Virginia, which is a set of suburbs just outside of the city. And then we have a home as well on the beach in Florida. We get down to as often as we can, although not as often as we'd like.
Oh, dear. I know that just at this current point in time, there's another hurricane that's ripping through, is it the south, Florida and sort of around that area, or did it hit? I'm not too sure.
Well, it didn't make landfall, at least not yet. It's just skirting up along the coast after destroying a lot of the Bahamas. And it looks like it might hit South Carolina, which would be north of where we are, but still, we're not looking forward to that.
Yeah, one of the rare places in the States that I've actually been to is South Carolina, funnily enough. I had a friend that lived in Myrtle Beach, so I went there for a couple of days once in my life. Bypassed the rest of the country just to do that. Now, right, today we're going to sort of get to know you a bit, find out your story, and dive into some of the stuff that you're doing around your trading. So, do you want to start off by telling us how you got started in this?
Yeah. Well, like a lot of people that are interested in trading, I have no financial experience whatsoever. I have lots of education, but it has nothing to do with economics or finance or business. I'm a philosopher and theologian by training, with master's degrees and a doctorate, and taught at university for 17 years. And of course, a professor, doesn't really make a whole lot of money, just enough to get by. And I wanted my wife to not have to work if she didn't want to, and she was wanting to homeschool our kids. So I thought, well, trading sounds like a great way to make some extra income and be able to afford the single income so that my wife could stay at home. And so in 1996, I opened up a little trading account with some extra money that I earned from teaching summer school. And that's one of the things I always tell new traders is only use money when you're starting out. Only use money you can afford to lose. And that, of course, was our case. It was just extra money. We weren't really counting on it. And started trading in 1996 and did horrible first year, did horrible the second year. And it was finally after 2 years of just not knowing what I was doing and losing all kinds of money, all of that extra summer school money, that I decided to buckle down and really learn what trading was about. So I spent about 3 years reading everything I could, taking webinars, doing courses, online courses as well as on-site courses. Did some private coaching with a fellow whose name I won't mention because he was later indicted for fraud, but he did teach me some really good stuff. And after about 3 years of, mostly breaking even, I've started to turn profitable consistently. And that was around the year 2000. I joined an online community back in 2000. It was a investing thread, discussion thread, before the days of Facebook and Twitter and StockTwits, and built a little community there of interested traders where we shared strategies and knowledge with each other. We learned a lot from each other, and it became very popular, that thread, one of the top threads on that particular service. And so in 2002, October 2002, I decided to launch our first website and my first advisory letter just to share knowledge of what I was learning about trading with the wider community. And that letter kind of took off. It started to have a life of its own. And we went overnight to about 300 subscribers and just kind of grew from there. And 2007, I was asked by McGraw-Hill to write a book on trading. So we did that. And much to my surprise, much to McGraw-Hill's surprise, I think, it became a big bestseller. It's been translated into Chinese and German and Japanese and Korean and so on. And so after a few more years of just selling this one advisory product, we branched out and launched a couple new letters and some trading training materials, resources, webinars, manuals, private coaching service. And then in 2014, I came out with a second book. 2015 came out with a third book. And last year published the second edition of the first book, the first best-selling book, which I consider to be my best book. So if anyone is interested in learning how I trade, really on a step-by-step fashion, I would recommend the second edition of Trend Trading for a Living. You'll find that on Amazon and most bookstores. But yeah, that's kind of where we're at today. Now, I do a lot of trading myself. I manage an online day trading room where I give out my stock picks in live version, as well as the advisory products that we send out each evening to our members. But yeah, that's kind of where we're at today.
Wow. And I want to dive back into that time between your break even and becoming consistently profitable. I mean, what happened there? Was there anything that, or a progression, or can you sort of bring us back to those moments?
Yes. Well, I was making every newbie mistake in the book during my first 2 years of very horrible trading, where I was just losing right and left. And so I began to whittle down, and I learned the technical side of trading, which helped with sort of managing, where you're going to put your stops and where it is best to take profits. The position management side of things was a real big improvement in terms of my consistency as a trader. And the other thing that I think really turned me around, in addition to position management, was kind of developing a specialty in a particular setup. And I became a specialist in what I would just call a simple pullback setup. So the analysis of price trend, volume analysis, identifying when a pullback in the trend is just about to turn higher again. In other words, when that trend is about to resume. Those were all things that I really drilled down on, really focused on. And I kept track of every single trade that I made. I wrote down the reasons why I was making the trade. When things didn't work out, I tried to figure out what went wrong. Did I make a bad read on the chart? Did I miss something in the volume? Those kinds of things. And it was that, over a period of 3 years, really streamlining my focus on to a single trading setup, I think in addition to learning position management principles, those were the keys to my turnaround.
And how did you get to that point where you sort of realized that, okay, I've got to focus on a single trading setup versus multiple different things?
Well, I think it was actually something that my wife said to me, because I was telling her a little bit about my trading one day and was describing that, I tried this particular system for a couple of weeks and it was doing great initially, and then it stopped working. So I tried a second system, which started great, and then it stopped working. And then I went on to a third system and a fourth system. And she finally said to me, you got to stop changing your system. If you find a system that is working, you've got to stick with it, even through those periods where you do go through drawdowns, and every system will have that experience. And she was right. I really needed to specialize in and master a single trading system instead of trying to, find the next hottest system and getting frustrated with the system I was using and moving on to something new. Single-minded consistency was a big plus. So it was really her question, why are you changing so often? It got me thinking.
And I suppose drilling down into what you're actually doing. I mean, how are you? I suppose how mechanical was it, and how much of a sort of intuitive, like, I've done this enough times, I can recognize a good thing, a good setup versus a bad setup, did it become?
Yeah, that's a good question. And I would say I've always told my coaching clients that trading is a mix of both science and art. But I always say this too, that you need to learn the science first, master the science, master the rules of trading. And there are plenty of rules that have passed the test of time before you begin to trade by more of an intuitive style. So the rules themselves are fairly straightforward and very, very simple. If you're analyzing a trend, you would use trend measuring indicators, like moving averages are great ones to use, or something like the MACD, the moving average convergence divergence. And all of these tools, these indicators, give you 100% objective signals. So, for example, when a stochastics drops below 25 and then percentage K curls up and crosses percentage D, you've got a buy signal. And when it rises up above 75 and percentage D curls down below percentage D, you've got a sell signal. So these are 100% mechanical, objective tools that you can use to learn the basics of the system, the systematic side of the system. But then within the parameters of those restrictions, and you've got also things like your profit to loss ratio, and you never want to take a trade that is anything less than, say, a 2.0 profit to loss ratio, because it's just not worth taking. So you've got those kinds of mechanical, 100% objective ways of structuring your trade. Within those things, you can use your intuition that has been honed over years of experience. So I've taken in my lifetime, I don't know, maybe 100,000 trades. I mean, that's maybe too high, but it's up there. It's several thousand trades per year. I know that much. And I've been trading for 22 some odd years now. So with all of that experience, yes, there is a way in which you can rely on your intuition, your experience, to determine, maybe this particular trade passes all of my objective criteria, but there's just something about it that doesn't sit right with me. I just can tell by the look of the chart that it's not going to do what I want it to do. I'm going to pass on that. Or, here's one that doesn't quite match all the objective principles that I'm going to use to get in a trade and to manage a trade, but there's just something about that chart. I just know it's going to be going up here shortly. I'm going to get on board. So those are the kinds of decisions you can make, but I would, that takes a lot of years of experience. And even then, you try to work within the rules of your system as much as you can.
Righty-ho. Okay, cool. Well, look, let's dive into some of the stuff that you're actually doing. So, I mean, do you want to walk through how I suppose start off with what instruments you're trading on a regular basis?
Mm-hmm. Well, I'm pretty much of a stocks guy. 90% of my trades are in stocks. Now, I have a lot of experience with options, stock options, that is, and index options, and I manage an options advisory service, and I do private coaching in the area of options and so on. But I'm not a big options trader myself. I like to trade stocks. I just hate time decay, which is what you're always dealing with options. And although I'm primarily an options seller when I do use options, which of course puts time decay in your favor, I would just rather trade the stock. I don't know. It's just something about the underlying principle itself that I prefer to trade. But I also do, almost on a daily basis, I will trade in and out of the E-mini index futures contracts, which I like a lot for hedging purposes. So if 80% of my portfolio is long, and I see that, the market's really kind of topping out here and looks like it's going to be pulling back for the next maybe couple of days, I'll throw on some future contracts on the short side as a way of hedging. And I'll also drill down into the 1 minute, 3 minute, 5 minute charts on those futures contracts to do a little bit of day trading just to keep my interest in it, because I enjoy that. I enjoy that real short-term kind of stuff. But for the most part, I'm trading stocks, and I'm trading in a swing trade time frame. So anywhere from 2 days to 2 months is kind of the time frame that I work with primarily. I do a lot of long-term investing as well, but that's a whole nother ballgame. I have 3 accounts. So I have my day trading account, which is fairly small. I have my primary income account, the one that I use to pay our bills and to pay our taxes and to, pay the vacation travel and that sort of thing. And then when that tops out at 200,000, I'll take 50,000 off the top of that and put that into our long-term investing account as a way of leveraging our long-term investments. And by long-term, I mean 1 year at least. And that's really where real wealth is built in the market. It's in those long-term investments. If you can open up a retirement account, defer the taxes, and don't touch those stocks, as long as you're buying quality companies, that's where the real wealth is built. But my trading account, I should say, is primarily stocks with a little bit of options now and then, and some day trading in the futures.
And that, so do you use for your investment account? Do you use the same strategy that you use for the other two?
No, not really. I'll use technical analysis to time entry into the trade, but for the most part, I'm relying on fundamental analysis of companies, and that's where I really drill down. I offer a monthly newsletter called the Ichthus letter for long-term investors, and we produce one new investment a month. So for 30 days, I'm calling up the analyst community. I'm calling executives at the company. I'm, visiting on site if I can, but I don't usually do that. Don't have the time to do that. And, studying the balance sheets and all that stuff to find the best investments. And we've done really well with that. But then the market's been, for the most part, pretty bullish too. So that helps. We haven't really, had any major drawback since 2008. And so long-term investing has been a rather easy process, but yeah, that's what I do for the long term.
And maybe talking about the income account that you trade, I mean, what's the winning percentage and risk to reward ratio on most of those trades?
Well, the day trades, I'll be honest, I'm not the best day trader in the world. I just enjoy it too much to stop doing it. But my win-loss ratio for the day trades is just right around 50%. So I'm, half of my day trades are losing trades. But I keep very, very tight stops. And I'm looking for about a 1.8 to 2.8 profit to loss ratio. So if I'm trading the the NASDAQ 100 E-mini, I might have a 7-handle stop loss, but then there would be a 14-handle, 12 to 14-handle profit target. So that's kind of how I work those spreads. For swing trading, I'm a bit better there, maybe low 60%. Actually, I know exactly what it is. It's 63% because I keep very, very tight statistics on all of my trades. 63% is my long-term track record for swing trades. Our profit to loss ratio is a bit better. It's maybe about 2.5. I think it's now 2.4 to 1 on the swing trades.
Okay, and so you're doing the day trading, you're doing the swing trading. I mean, what does your typical trading day look like?
Well, I get to my desk around 8 a.m. Eastern time, which is an hour and a half before the U.S. market opens. I check the futures, I check the news, I see what's gapping overnight. Those gap trades are often really nice for day trading purposes. I'll check our current opens and adjust stops as needed and any news cycle that's coming out on our open swing trades. At around 9 o'clock, I'll log in to the Dr. Stocks trading room and chat with some of the members there and tell them what I've seen so far and give them some updates on our open positions. And I might even, between 9 and 9:30, put on a day trade or two in the E-minis if there's something moving nicely and setting up nicely. But for the most part, it's 9:30, we're good to go. I try as much as I can to have my trades already set up before the bell rings. I mean, I like to go in with a watch list of maybe 9 to 10 stocks, and 3 or 4 of them are stocks that I really, really would like to get into, long or short. And I already know, for the most part ahead of time, at what price I'll be buying and at where I'll be putting my stop loss, where I would like to take profits before the trading even begins. Now, all of that can change radically in the first 5 minutes of trading, right? But I just like to have a good sense of which of the 8 or 9 stocks on my watch list, which are the 3 or 4 that I'm really going to be focusing on. I just like to streamline my focus. Otherwise, I get too ADD. I get too confused with too much information. And so those are the 3 or 4 stocks that I'll focus on, and then I just watch. I just sit there and watch. I've got all the charts up, 4 big monitors. I've got all the charts up, and I'm just watching the little ticks in the 1-minute chart, the 5-minute chart, the hourly chart. I'll draw all kinds of lines on the charts for primary support and resistance levels, monitoring volume to see, at what price does support get defended and at what price are buyers waning and sellers taking over. And those are I always tell my students, you got to know your levels. You got to know your levels. And those are the levels that I'll be very mindful of. And probably I put on the majority of my day trades after 9:45, so I've got 15 minutes there of market data after the open to judge from. And swing trades can go on at any time, but for the most part, they're later in the day. I like to enter trades after the lunch hour. I just find that the afternoon trading tends to be a little smoother than those first hour or so of the morning session. And then 4 o'clock, the bell rings. I get back into the trading room and wind down with the members, talk a little bit about how the trading went that day. I give them an updated list of our open swing trades with new stop losses if needed. And then I'll spend the next couple of hours working on my advisory letters and try to call it quits at about 6 p.m. That's a typical day.
Yeah, okay, cool. Oh, well, it sounds like you got a busy day there. All right, we're going to slightly alter the conversation. I don't know if this is even of interest to you, but I mean, have you traded or thought to trade cryptocurrencies? Do you have students that are out there asking you questions about it? What's your view on them?
Well, I'm familiar with the bullish view on Bitcoin, and that's the only crypto that I'm familiar with at all. And I've thrown a few trades on the GBTC, which is it's a proxy for Bitcoin. So you're not actually trading the Bitcoin itself. It's like an exchange-traded fund that follows the price of Bitcoin. And I haven't done very well with it. Those overnight gaps, as you'll find with a lot of currencies or any kind of a ADR or foreign company, can just be so unpredictable. So I have no problem with someone being a long-term bull on Bitcoin because it does seem like something with a lot of potential, but it's not for me. It's just not for me. And the whole Forex, in fact, I took this massive course on Forex a few years back and learned a tremendous amount about Forex and realized that there was just way too much for me to know. I mean, I have a doctorate from Oxford in philosophy, so it's not like I can't understand complex material, but to be able to crunch all the data coming out of two countries, let alone one country, is just too much for me. And I know people that trade Forex just based on technicals alone, which is fine. I have no problem with that. But it just wasn't for me. I wasn't consistent enough with it, whereas I have been with stocks. So you got to know your limits when it comes to trading.
Yeah, it's interesting. I've had a few guys on the show who started off with stocks. They did all right, and then they decided to move to Forex, and it took them like another 2 or 3 years to really get it. So it is a different beast altogether. And I don't know if it's easier the other way around. I'm not too sure. I haven't really looked into it, but that's for another day. Hey, so way back in the beginning, I mean, what do you think made you different from everyone else out there who, dipped their toe in the water and didn't make it happen? Why did you stick with it, and why did you find success?
Well, that's a great question. My motivation to stick with trading was primarily so that I could have this second income, and which would enable my wife to stay home and homeschool our kids. So, and it seemed to me, with a doctorate in philosophy and theology, I wasn't really a hot commodity for. I couldn't become a consultant to businesses or do a lot of the other moonlighting jobs that others do. And the whole world of e-commerce and selling product online was opening up in 2002. Nowadays, it's so much easier to just, throw up a website and link up your e-commerce, your merchant accounts and so on, and begin selling on day one. Couldn't do that back then. It was a little more work, but it was opening up. And so that seemed like a natural way to go, to be able to provide a second income for our family. And then secondly, I've always had an interest in the stock market and a real passion for it. Ever since I was a kid, I used to read books about Warren Buffett and Peter Lynch and others. And so I guess one of the things that makes me different was that a strong motivation to continue even when it was tough going at the beginning. And I had a passion for it, which I think if you have a real passion for it and you're willing to sit through those long months and years even of losing money that it takes to gain that education, then you have a very good chance of making it, very good chance of making a good trader.
Okay, so passion's a massive thing, I think, and it's been echoed in previous interviews I've done as well. So, guys, just think about how passionate you are. Do you dip in and dip out, or is this something you're here for the long term? Now, thinking about some of the listeners out there who might be working in a day job, I mean, what steps would you recommend they start taking to start, I suppose, getting to that point where you've got an income account and you're taking out sort of enough money to pay the bills from trading stocks?
Yeah, that's a good question too, and I want to speak to those who. I get emails almost on a daily basis from people interested in our services, and they'll often ask me, how much money do I need to quit my day job and start trading? Well, first of all, you need a lot of experience if you're going to trade for a living, but you also need a lot of money. So you're not going to be quitting your day job until you have at least a 6-figure account, because that's the size of an account you're going to need be able to provide, even if you're just living a single life and you don't have a family to support. A six-figure account is the size of account at least that you'll need to provide yourself a stable income without having to draw down the principal itself. You want to be able to take money off the top. But I would suggest for those that are working full-time and want to try their hand at trading, that number one, you start with real money. This whole idea of paper trading is really false. Don't even think about it. You've got to open up an account with real money. You can start with $2,000. That's usually the amount that I recommend people starting with. I myself started with $2,500 and lost that twice. So I know how it goes. And start with very, very small position sizes. So with $2,500 in your account, you can start by trading only $500 per position. And even if you're only making $5, $6, $7 per trade, you are gaining valuable experience. So that's really where you need to start. You start small, you keep your position size small. And I would also recommend that while you're trying your hand at trading, that you would learn as much as you can from as many sources as you can. I must have read 40 books on trading. I took several online webinars. I took several on-site webinars. I paid several thousands of dollars in my education. And it was all very valuable stuff. I mean, granted, there are things you're going to learn from some people that are not a good fit for your type of trading, your type of character, your personality, or even the time frame that you have to trade and those kinds of restrictions. But everything that you learn from someone who's successful at trading is worth learning, definitely worth learning. So start small, start with real money, take small position sizes, learn all you can. And I think those are really good ways of getting a good start toward trading.
And in terms of learning all you can, I mean, how did you personally sort of filter out what you thought wasn't valuable, or how did you get the level of trust in your educator or mentor that, you know, obviously the guy who was indicted, probably not the best, not the most trustworthy person, but I mean, how did you sort of know what to believe and what not to believe? Because I mean, there's a lot of sort of conflicting information out there, and at some point you have to sort of make a call on this stuff is valuable to me and this stuff works versus this stuff doesn't, or I don't believe it. And how do you sort of validate that you're not wrong in that decision making?
Yeah. Well, you want to do your due diligence first on whomever you are learning from. And it's not just enough in our business to have a website that touts great performance because, well, you know, the people can fudge their performance data. Unfortunately, it's an unfortunate thing that happens. But if someone is genuinely trading for a living, and one of the ways you can tell that is if they have a live trading room, you sit in that room for a month and see if they're making money, if they're actually making money. That's one of the reasons why I have a live trading room, is because I want to demonstrate to people that, yeah, I'm not perfect and I do have a lot of losses, but I am consistently profitable. And if you do what I'm doing, you will learn how to trade. So if a person has a live trading room, they're consistently profitable, not always perfect, but consistently profitable, then that is a person that I would look to for solid trading advice. Now, in order to sort out what's going to be a good fit for you from what isn't, you really need to think through your risk profile and the kind of personality that you have. Now, for me, I have a pretty low risk profile, which means I'm not going to do the high risk stuff. I'm not going to put on huge position sizes in something that's very volatile. I just can't handle that kind of stress. But I like to have enough of a profit potential that the real slow, sluggish blue chip stocks aren't exciting to me either. So I find myself right in the middle. I trade a lot of small to mid cap stocks, but they're very liquid. They make consistent moves. I'm not looking for something that jumps up and down within a heartbeat. that just drives me crazy. But there are a lot of people that trade that kind of stuff. They trade the 1 second chart or the 10-second chart on, some wild fluctuating contract like the oil or gold. And they thrive on that stuff, but that's just not for me. So you have to really think through your risk profile and find someone who's able to teach you the kinds of trading that fit that profile. And then you have to think about your time frame. I mean, if you're working 9 to 5, then you're going to have to find something to trade before 9 or after 5. And that kind of limits what you can trade. So you're going to be looking at Forex or maybe the index futures as opposed to stocks, because you're not going to be able to trade stocks if you can't get to a computer during the 9 to 5 period. So those are the kinds of things you think about. And then once you have a sense of your risk profile and what you can trade, you find a mentor that is able to teach you those skills. So that would be the best way of going about it.
Yeah, very logical. I like it. It's good advice to you guys. So take that on board. Now, diving into some technicals. I mean, you mentioned a couple of indicators before. What about if you're recommending one of our listeners out there jump on a price chart and start doing a bit of investigation? What would you recommend?
Well, there's so many ways of analyzing the price chart, but you want to keep things as simple as possible, particularly if you are new to trading and don't have a lot of experience. I myself am a minimalist when it comes to analyzing charts. The only things I have on my chart, I will from time to time put on various indicators, but consistently when I'm eyeballing a watch list of charts for setups, I'll have a couple of moving averages. I'll have either the MACD or the RSI, which are the two momentum indicators that I prefer. And I'll have a candlestick chart with volume bars at the bottom. And that's really it when I'm eyeballing charts looking for particular setups. Now, once I find a setup, I'll drill up to the weekly chart, down to the intraday charts, and I might add on a couple of indicators like the stochastics, which I mentioned before. I also like to use what I call a moving average band, which is a single exponential moving average, but set at the high, at the low, and at the close. So you actually have 3 moving averages that run parallel to each other, and those bands tend to act as support and resistance, is a kind of I don't know how to describe it, but they act as
channel sort of thing.
Like a channel, exactly. That's a good word for it. Exactly. So if I'm talking to someone who's never really traded before, then I would first ask that person to focus primarily on moving averages. They're going to tell you the trend of the underlying stock. If the moving averages are moving upward from the left side of the chart to the right side of the chart, you know you're in an uptrend. If they're moving down, you're in a downtrend. If they're flat or very choppy, mostly moving sideways, you know you are in a trading range. And with that information right there, you're already well ahead of 80% of the trading community, which is so focused on other things. You need to know whether your stock is generally trading up, generally trading down, or is caught within a trading range, a consolidation period of some sort. And then you can look at individual moving averages. Like, let's say, for example, the two that are most commonly used are the 20 period and the 50 period. The 20 period is fast. The 50 period is the slow moving average. If the 20 period is above the 50 period, again, you're in an uptrend. If the 20 is below the 50, you're in a downtrend. If the 20 is popping up and down above and below the 50 period moving average, you're in a trading range. All of this, by the way, I spell out in my book, Trend Trading for a Living, both first and second editions. And I give a little test there on how to determine uptrend, downtrend, trading range. And I divide those into 5 different styles. So you have strong uptrend, weak uptrend, trading range, strong downtrend, strong weak downtrend, all based on the 20 and the 50 period moving average.
Okay, interesting.
Yeah.
Cool. Look, there's a lot going on there. So a lot of the stuff that if somebody's looking to jump on a price chart. I suppose the good thing that I sort of took away there was, and what some other people may, I suppose, early on in your trading career, you'll hear about moving average crossover, bang, I'm in. And what you're saying is part of a wider puzzle, and a much wider puzzle, wider than you could probably even imagine. So it's, whereas I think people go, oh great, it crosses over, I'm in for the sell, and or I'm in for the buy, and all of a sudden it doesn't work, and it's like, moving average indicators don't work, full stop. And that's where they sort of draw the line in the sand and move on from it, never to look at it again. Whilst I suppose it's just perspective really when it comes down to it, isn't it?
Yeah, by the time you get a crossover in the moving averages, it's too late. So you want to anticipate crossovers or ride the trend that's already in place. One other tip I would give to new traders, if you're looking at those two moving averages, the 20 and the 50, as I said, one of my specialties is in pullbacks. You want to find a stock that is in an uptrend where the price has pulled back to between the 20 and the 50. If it tags the 50 and pushes off, all the better. That's really a great entry signal. If it just hovers in between the 20 and 50, kind of consolidates there for a little bit, then you're going to want to look for a candle that closes above the last 3 or 4 candles. That would be your entry price, your entry signal. Or you can throw a stochastics indicator on the chart and use that as your entry. So if it dips below 25 or even 20, and then you get that bullish crossover of the percentage K above percentage D, that would be your entry signal. There are all sorts of ways of determining entry signal, but you can't just buy a stock in an uptrend. You've got to wait for a lower risk entry, and then you put your stop loss maybe below the 50 period moving average, and then trail that up as the trade matures.
Okay, cool. Great advice there. Great advice. Right, we're going to jump into the quickfire round here to help the listeners understand what it takes to become a successful trader. So, are you ready for it?
Yes, hit me.
Righty-ho. So, the first question is, how long did it take you to go from newbie to consistently profitable?
Well, I mentioned that at the beginning. First 2 years, lost money. In fact, in my first book, Trend Trading for a Living, I narrate the worst trade ever, which I'll get to in a moment because I think you're going to ask that one too.
Yeah.
But first 2 years, unprofitable. The next 3 years, consistently break even, I would say. A little bit of a loss in that first year after the first 2 years. And then the next 2 years were pretty close to break even. And then it just started to take off from there. So 5 years altogether, which I guess I'm kind of a slow learner because most people learn more quickly than that.
What's your mental approach to trading, and do you have any special techniques you can share with us?
That's a great question. And I would have to say the most important thing, I try to get this across to all my coaching clients and my day trading room members, is you have to be detached from profit and loss. So it's so easy. I've suffered with this for years myself until I kind of mastered this. It is so easy to think of yourself as a bad guy when you take a bad loss, and to think of yourself as being a good guy when you take a big profit. When you take a horrible loss or a series of losses, or you go through a several week drawdown, you can feel like a total loser. And then you have a great winning streak and you think, oh man, I'm on top of the world. The whole world is opening up. I'm going to be, buying the big mansion or whatever. You have to detach yourself from profit and loss. Detach your identity from profit and loss. Instead, you're going to evaluate yourself as a trader based on how well did I obey my system. If I take a loss in a day, or if I have a drawdown, but I obeyed my system, I'm good. That's a good thing. I'm doing great as a trader. And if I obey all the rules of my system and I'm profitable, that's all the better. If I don't obey the rules of my system and I'm profitable, that is not good. I'm not a good trader doing that. So detach yourself from profit and loss and attach your identity as a trader, not your personal identity. That's a whole different thing. But attach your identity as a trader to how well did I obey the rules of my system. And that's it.
Superb advice. Superb. What's your favorite entry setup?
Now, as I said before, the pullback setup is my favorite. It's the very first system that I learned. It's one that I only traded exclusively. I'm a system builder. So I've built over 30 different trading systems, and some are breakout, some are continuation, some are mean reversion, and so on. But of all the systems I've created, the simple pullback is my favorite. And again, it's pretty much what I mentioned earlier with the moving averages, and then an oscillator like stochastics to determine oversold condition, and looking at candlesticks to determine your entry price. It's all rather simple stuff. But yeah, that's my favorite setup.
What strategies do you use to exit or manage active trades?
Well, I always look at my stop loss first. So I'm going to determine my stop loss. And by the way, stop loss should always determine your position size. So you first plot your stop loss on the chart. In fact, you should know this before you even enter the trade. And then you determine from your entry to the stop loss, how much can I afford to lose? I have a maximum loss amount per trade. It's actually pretty small compared to my account size. I just don't like to lose a lot of money. And that will determine my position size. So you have to determine your stop loss first. And then a good rule of thumb is just double that for your target. But I do a little more sophisticated process than that. I look at, trend lines and Fibonacci retracements and so on to determine the most probable place where the stock is going to top out. And that will be my target area. And again, if it's not anything at least like a 2-to-1 profit to loss ratio, I'm not even going to look at the trade.
What's your recommended trading book?
Well, I could say my own,
excluding your own. I think we talked about that.
I do recommend it, but I'll tell you what my favorite trading book is, and the one that I've read several times now. I'm a big fan of William O'Neill, Investors Business Daily, Investors.com, the MarketSmith charting software, the whole package. I'm actually a partner with IBD, and that's not because I'm anybody special, but I'm very passionate about their service. William O'Neill's book, How to Make Money in Stocks, it's one of the best-selling books of all time, is a brilliant system. My own understanding of the fundamentals of a company come right out of that book, in addition to some other things too. But 80% of what I do comes out of his work. It's a very inspirational book, and it's really the best. It's much better than my book. So if you only can afford one book, then you want to buy William O'Neill's book.
If there was one thing you'd recommend any retail trader spend the next month mastering, what would it be, why, and how could they go about mastering it?
Yeah, no, that's a good question. Well, it's been said many times by many better traders than myself that position management is the key to consistent profits. There are three keys to consistency in trading. One is your profit to loss ratio per trade. So are your winners bigger than your losers? Second is the win ratio, which my win ratio I don't think is all that good, but where I'm a winning trader is my size of profits to losses is pretty good. And then thirdly is how many days in a row are you making money versus how many days in a row are you losing money? How many weeks in a row? How many profitable months have you had in a row? Those are the three keys to consistency. And the way that you're going to improve in all three of those areas is mastering position management. By position management, I mean the position size that you're putting on, how many shares are you buying, how much money do you have at risk in any individual trade, and that's a function of both position size and where you set your stop loss. And then the exit strategy. How are you going to determine when to get out of the trade? Your stop loss can take you out, and I always recommend people just let the stop take you out of the trade. Don't overthink it. But exiting the trade is a little bit more of a finesse move, a little more nuance going on there. A simple 2-to-1 profit ratio is a good rule of thumb to follow, but there are better ways of doing it too. So learn position management. That would be number one for sure.
What's your preferred broker and trading platform?
I've been with Interactive Brokers since 1996, so I'm probably one of their longest-lasting customers. I don't know. It's not the best platform out there. It's not as user-friendly as some other things that I've tried. I mean, I also have an E-Trade account that I use for long-term stuff. But it is a very robust platform for active traders, and they have an excellent commission structure. It's very cheap to get in and out. They have the highest interest rate on uninvested cash, which means you're going to be adding a little bit of cushion to your trading if you're not fully invested all the time. They have the lowest margin rates by far. I mean, their margin rate is like half of what all the other brokers are. They also pay you if you're willing in your long positions to lend out shares to the short sellers. And the way they do that is you never even see your shares go out. They're just being lent out kind of behind the scenes. And so you get some interest on that. So between that and the cash interest and any dividends coming in, I have a pretty healthy little cash flow going there, which effectively it certainly overcomes my trading commissions, which can be quite high because I'm very active. So yeah, I would say Interactive Brokers I like a lot.
Yeah, I didn't even know they offered those services. Now, we're into that question. So the worst trade, you mentioned it earlier. Looking forward to hearing this story.
Yeah. Well, it was the first year of trading, and I didn't know what I was doing at all. I knew nothing about technical analysis, nothing about fundamental analysis. I got on a chat site, and everybody was talking about this little company, small cap company, trading around $2 a share, that had proprietary technology that would turn salt water into drinking water, and as well as other kinds of like sewage water into drinking water. I mean, it's crazy stuff.
Yeah.
Now, and then the rumor was that the CEO of the company was going to be on the nightly news that night, and everybody was expecting the stock to skyrocket. So I had $2,500 in my account from my my summer school money. I put it all, 1,000 shares, or at least 1,200 shares or so, on that $2 stock. And by the time it closed that day, it was up $4. So I'd already doubled my money, and I thought, man, this is the easiest thing in the world. And then the news comes on, and it wasn't the CEO of the company that I bought. It was the CEO of their competitor. That was the first problem. And then the second problem was the CEO had to say that the product was not even going to come to market for at least 10 years because the technology wasn't there and they couldn't scale it and all those sorts of things. So by the time the stock opened up the next day, and there was no pre-market trading in those days, it was half the price of what I bought it in. It went from $4 down to $1 overnight, and I got out as quick as I could, and I think I got 80 cents a share for it. Big loss. So I learned my lesson, and I learned don't trade on rumor, don't trade on someone else's, stock tweet. Don't do those kinds of things because it will just lead to ruin.
Right, last question of the quickfire round. So if you could you leave our listeners with one piece of advice, what would it be?
Oh boy, that's a good one. I would say I'm going to give you two pieces of advice, and I've already said these already. One is start small. If you don't have a lot of trading experience, you don't have a lot of trading knowledge, you haven't done the hard work in educating yourself on how to trade, I have no problem with a person at least getting a start, but start very small. And the second thing I would say is until you learn how to trade, and really also how to analyze companies, because I'm really quite big now in my latter years on understanding the fundamentals of the company. You really want to find a company that has growth potential. If you don't understand those things, then stick with what you know. Stick with companies that are well-known, big brands, Apple, Walmart, Starbucks, because those are the kinds of companies that, everyone has to buy, everyone has to own. All the big index firms have to buy it. The big hedge funds buy them. So even if you make a mistake in terms of your timing, you'll minimize your risk because they are well-known names and they're not going to go away overnight. And if you really want to try trading, then start with those big, well-known, familiar names and start small. Those are the two things I would suggest.
Superb. Right, last question of the show here, Thomas. So before we wrap up, what's the best way for traders to get hold of you?
Best thing to do is go to our website, www.drstocks.com. That's drstoxx.com. You can contact me through the site. I also am very active on StockTwits. You can follow me there, Dr. Stocks, at Dr. Stocks. I'm on Twitter, at Dr. Stocks. And we have a Facebook page, the Dr. Stocks Facebook page, drstockstrading.com Facebook page. So those are ways you can get a hold of me.
Superb. Well, look, a big thank you to Dr. Thomas Carr for sharing with us today. Everything we've discussed here, along with all the links, are in the show notes. To find them, simply search for Thomas. That's THOMAS in the search box on TradingNut.com. Until next time, I wish all my listeners trading happiness and success. All right, guys, so there we go. Interview with Dr. Thomas Carr, done and dusted. Hope you enjoyed that. Now, if you do want a little bit more, we have got a video for you that's up on the TradingNut YouTube channel. And where else can you find it? You can find it on the TradingNut.com website under Dr. Thomas Carr's show page. So go over there, check that out. Whilst you're there, check out the Robot Traders Club. As I said, we've got that strategy supplied by a listener out there called Elvin, who's also a member of the Robot Traders Club. Thanks for that, Elvin. So I might even do a little video on that and put that up on the YouTube channel as well. But guys, for now, you can go and check that out. If you want to join up, give it a 14-day trial on the Robot Traders Club and check it out. What else can I tell you? Oh, look, next week we've got a Forex interview. So I know we've been quite stock heavy in the last few weeks, but we've got a Forex one coming up. A little bit different, but very interesting. And what else can I say? Oh, actually, a really good video on the end of it as well. All right, folks, until next time, have a great week, and I'll see you in the markets.